Welcome to Lessons from the Sell Side Trenches, alignment and understanding different types of buyers. This session is presented by Clifton Larson Allen. Let's meet our panelists. Aaron Hollander, Chairman and CEO, First Aviation Services. Chris Rosbrook, CFO of Ecos. Rich Jones, Partner, The Zabel Companies. Ben Axelrod, Managing Director and Head of Investment Banking at CLA. And your moderator is Matthew Barnett, Managing Partner of CLA. Matt, take it away.
Well, good morning and welcome. Thank you for joining us today. We're happy to be here. We have a great panel, a very filled hour ahead of us, and just really feel blessed to be with you, even though it's virtually, and spend some time talking about what's really a hot topic in general, but what's even a hotter topic these days, considering the current business and economic environment that we're in. We're fortunate to have a great panel. You've heard a little bit about their bios. The panelists will share a little bit more throughout the next 30 minutes. But just wanted to highlight that you're going to get a view from a lot of different vantage points. We've got C-suite management team, founder, owner, and strategic buyer, private equity and investment banking here. So there's going to be no shortage of expertise and perspective. And we're really excited to spend, again, the next 30 minutes talking through a number of areas, and then taking that offline and spending some time talking a little more directly about anything that we don't cover that's of interest. So with that, we'll get right into it. And again, good morning. I'm Matt Barnett, and I'm happy to be the moderator, and I'll be the run of show today. We're going to start with one of three segments to talk about the current business environment. We're going to shift and talk about preparing for a transaction kind of post-COVID, and what owners and their advisors can do now to set themselves up for success going forward. And lastly, and this might be the most interesting part of the session, we're going to spend some time talking about best practices. We got a lot of experience here on the panel, and there's no shortage of great stories and experiences. And so we're going to let everybody go around and just share what they think is most helpful to talk when they're talking with an owner about what they've seen and what they've dealt with, and just little tips of the trade. So with that, on to the segment one and the current environment. And I'll just lead off by acknowledging I'm getting phone calls, and I've been getting phone calls for months now from owners and executives and boards of directors asking me what I'm seeing in the market, what CLA is seeing with our clients and those that we're working with. And so there's no shortage of interest, is my point, to what's going on. People want visibility. They want some comfort to know how to handle this. And so let's start there. And I'm going to lead off with Ben. And Ben, and after Ben, we'll shift over to Chris. Talk about, if you would, how are buyers viewing the COVID period and the financial results that are being created, or in some cases not created, over the last couple of months and in the coming months. We don't know when this is going to end.
Right. Well, thank you, Matt, and thank you, everyone. It's a pleasure to be here in this virtual format. Look, to jump right in, and our practice at CLA on the investment banking side, it's we're generalists, and so we see transactions and clients in all sorts of industries. And so the answer to your question, Matt, I think in a lot of regard, it depends on the industry, of course, that our clients are in. But perhaps, if there are some common themes, I think what we're seeing are three points of focus, right? First and foremost, I think just about for every business out there, the understanding of, okay, how has the company done, and what are some of the adjustments, or what are some of the things that are impacting a specific company, a specific target when they're looking at opportunities. So that's one. And the focus there really is on how has the company performed. I think everybody understands that March, April has been was tough and was a shock to the system for everybody. But how has the company performed since March, April? So in that May, June, July timeframe and since. So what business owners can be doing, of course, is documenting, and I think everybody probably knows this at this point, but you'd be surprised how many calls we get from people that aren't doing as good a job with this as they probably should be, is documenting every adjustment, every impact, possible impact to their business of COVID. And it's not just the direct costs. It's not just for businesses that have been hit directly, whether they've been had to be shut down or whether they've had some workforce impact, manufacturing businesses that have had cases of COVID, for example. But it's also the indirect cost, the opportunity cost if they've been playing catch up since. So that's item number one. I think the second item, and perhaps even more in those on this panel that are on the buy side, I think they probably will confirm this, is really understanding how management teams have reacted to the challenges, right? Because COVID will pass at some point and the impacts will be there, but how management teams have reacted and what they have done to face those challenges and the ability to tell that story. I think management teams these days and their capabilities and abilities to react are more important than ever and are diligenced more than ever by buyers. And then last, I think the third point I would say is for those businesses, and there are businesses out there, we're talking to a lot of, for example, chemicals manufacturers, even contract manufacturers in the chemical space that have been favorably impacted by the pandemic, and a lot of the business that's come their way by the virtue of being able to manufacture sanitizing solution, for example. Being able to document and explain so that buyers don't dismiss all those benefits as one time in situations that, for example, if you're making products that are, or if you're involved in manufacturing products somewhere along the supply chain that are going to be sustained even after there is a vaccine, let's say, because of just the new normal and people are much more used to washing their hands or sanitizing their hands. Keeping track of that and being able to tell that story, those are the three themes that we're seeing out there.
So, Chris, you're on the inside. You're the guy that's fielding emails and phone calls because you got any number of people that are beating down your doors. You're with a technology company, and you'll inevitably be sold likely at some point. Talk to us about what you're seeing from the inside, even though we're asking about the kind of the buyer's perspective here.
Yeah, thank you for that, Matt. I do, as the CFO at EKOS, I do sit in an operational role, and the things that Ben is seeing from his side, I see it from, as you said, from the inside. And Ben mentioned a few companies that will do better in 2020 than they had planned, but I do think it's a safe bet that most businesses, ours included, is not going to achieve the results that we set forth when we went through a budget process in November and December before any of us were talking about COVID. Mm-hmm. We are, as you said, a very high growth technology, a software as a service business. We serve customers primarily in the craft brewing industry, and that industry has been impacted. They have been forced to close their tap rooms. That's affected their sales. So we, as a result, we will grow nicely this year, very nicely, but it won't be at the growth rate that we all had expected as we went into the year. And I say that as context because, like Ben, I think there's some things we can do and must do to tell our story. And I think if we do those things correctly, we'll get a pass. Maybe not a full pass, but we can earn our way toward a pass on not showing the growth number that we all expected to have at the beginning of the year. And to me, again, like Ben, I've got a list of three things. The first is a story of resiliency. We sit here 6 months into COVID, and the market and the economy have been much more resilient than we thought they would be as we came into this. So I think we do want to be able to fit our story to that resiliency. And for us, that's being very detailed about how we talk about results in March and April as things went down, and then April, May, June as things came back and we started to build momentum again in the business. The second thing I'd say, again, Ben, was similar. Take note of and emphasize the actions that you've taken to proactively manage the business through this time, and that can be things on the softer side. We did a lot to build on our relationships with customers well outside of our business model. We shared our marketing department with our customers. Our customers were forced to find new ways to sell through e-commerce and online. We had some very good skills internally at EKOS that could help them do that. So we put our marketing department out there for anybody that wanted to leverage it and use those resources. We also took some actions where customers needed some financial help, and we were willing to forego some monthly subscription payments to help those customers as they worked their way through kind of March and April. So, be thoughtful on how you cared for your customers, have a story on how you cared for your customers. And then on the hard dollar side, We were able to cut costs. Fortunately, we were able to do that without having to let go any of our employees, but by proactively looking at the balance sheet and managing cash. We will actually end this year, despite all of the challenges, we will end this year with more cash than we had predicted at the beginning of the year. And as I talk to investors and have conversations around, that's a point that definitely resonates with them, that we're going to end up in a better cash position than what our original budget showed. And then the final piece I would focus everybody on is be very sharp on unit economics. I think to the extent buyers will be quantitative in their analysis, they always are. If they're going to give you a little bit of a pass on growth, they're going to dig in very deeply on unit economics, your customer acquisition cost, your customer retention, as their way to understand the business and to know how the business is going to perform as we do return toward times that are a little bit more normal.
Yeah. So I think there are a couple nice takeaways there. One, there's a lot of variables, right, to help somebody normalize and understand earnings. And documenting all of those in a detailed fashion is critical. And the intangibles, like what Ben said, what was management's response? What was the culture? How did the people work together to get through it? And whether they had that stuff in place before, COVID, certainly there's going to be an expectation post-COVID that you're running your business a little bit differently and investing some dollars in risk mitigation. Same current environment. And I want to be mindful of time, so we save plenty of time for the third segment here. To Rich, saying a little twist on the topic here, but everybody wants to know how is this going to impact valuations? And so, what are you as a buyer thinking and seeing, and anything else you want to share from the buyer's perspective?
Sure. No, I appreciate that, Matt. It's funny. Ben spoke to kind of that March, April, May timeframe. I'd say even less so valuation and more just making sure there was equitable risk sharing. We were hearing a lot in the marketplace that folks were saying, gosh, in this time of uncertainty, right, we're willing to pay you a value of X, but I need to make sure that the asset that you're delivering to me is going to actually be there when we get through this pandemic. And so I'm going to take a portion of that, maybe cash purchase price, and put it into a structured earnout to make sure that we're sharing in the risk of this uncertainty. I feel like that was very prevalent kind of in that March, April, May timeframe. I was hearing a lot of people talk about that. At Zabel, we're longer term investors, and so we can be a little bit more circumspect about that. But those were definitely conversations we were having here internally. We closed on a healthcare business where the underlying trends were very positive, and our ability to kind of look at that from a long-term perspective enabled us to not kind of bring in any earnout structure around that. But there were definitely businesses out there that had I been looking at them, right, I would have wanted to make sure that I was kind of shoulder to shoulder with the seller and we were looking at that risk together. In terms of kind of just top line valuation, and I bet everybody's got unique perspectives on this. We've seen a flight to quality, right? There's been those businesses that are being severely impacted, and I think a lot of those are sitting on the sideline and maybe not being brought to market right now. And then you've got those that are being impacted in some way, shape, or form. But there's a very kind of plausible explanation for how they're being impacted and what that outlook's going to look like. And then there's those that are winning. I think for really good businesses, kind of in those last two categories, right, there's still the same amount of capital out there chasing now a much more limited a set of business opportunities. And so we're seeing some businesses where they're trading at values kind of north of where we would have otherwise expected them to. I think in general, though, we haven't seen a big material change from a valuation standpoint. We've just seen a piece of the market kind of not be out in the marketplace as a saleable business right now. I think the back end of that, and again, this kind of gets back to structure, we've also seen that come into play, right? There are definitely some winners out there that are seeing extremely high levels of growth through the pandemic. And some people are kind of holding out there, well, no, this is now sustainable. And again, it gets back to, I think structure can be a very good tool to bridge potential value gaps where a buyer is saying, I think do this going forward. And the seller says, I'm willing to pay you that, but I need to see that sustain. Yeah. In those instances, we business, I think Ben spoke to a chemical company that was playing kind of in the antimicrobial or kind of the right, the benefit of the pandemic was people were very focused on kind of cleaning. And this company was going through the roof, and we had very in-depth conversations with an intermediary. We're willing to pay you for that, but we need to see some staying power to that, right? It can't kind of here today, gone tomorrow. We need to know that that's going to be long-term for the business and for us as business owners. But I think the long and short of it, for really good businesses, we have not seen kind of a big hit to value.
So thank you for that, Rich. I'm curious about Aaron's perspective, because I know in talking with a number of other owners, and I know working with you, Aaron, you're acquisitive, you're a strategic buyer, and there might be some opportunities that are out there that maybe aren't being brought to market, but there's some opportunistic buyers out there as well. Where do you, as an owner and someone that's looking to add on, how do you view the valuations and opportunity?
Well, I couldn't agree more with the earlier speakers. So without repeating it, what I would say is that we saw this trend, this flight to quality, I think was already happening even before COVID. We were seeing this bifurcation. So the multiples of the quality companies, the amount of leverage was back to where we were at the financial crisis. I mean, there's a lot of capital out there at every place on the balance sheet. The less than perfect companies, we were already seeing some of the valuations going down. So as they say, if you've seen one crisis, you've seen one crisis. And that's the case here, because it is amazing to me and most of my colleagues, the valuations we're seeing in the stock market based on what we're seeing in Main Street. And most of us feel that we're going to have another hit with our economy. This isn't over and behind us. So, we expect to see a bumpy road. And for the most part, the M&A market doesn't like, and finance doesn't like, uncertainty. So I think with this bifurcation we're seeing is going to continue. But Matt, your other question, we are looking at this and saying there's got to be a pony in here somewhere. And we are actively out there looking for good companies. A lot of businesses went into this market well capitalized. So they have the balance sheet and the staying power for it. So yeah, we're out there looking, and we're hoping to see more of those opportunities.
Like sounds like somebody's calling right now to get a deal done, from what it sounds like. So
one other phone I think somehow is ringing. So.
All good. So let's shift gears a little bit and do a little more forward thinking and planning, if you will. Timing has shifted for some owners for a number of different reasons, and others might be rethinking, selling a business where they hadn't thought about it before, right? Based on some unusual positive trends. And I think Ben alluded to this early on, and I'm gonna have Chris lead off with this. Business disruption, right? That is a key. That's top of everybody's mind. Obviously, quality of earnings is factors that in to some degree, but there's an increased emphasis on what the management team is doing to not just maintain those earnings, but to make sure the business is there to handle an event, regardless of the nature of it. Talk to us about how people are handling that and how that can and should be addressed in the diligence process, Chris.
Yeah, I start with a frame of mind which isn't COVID dependent or isn't dependent on any specific timing for that matter. But as I've gone from place to place, I've tried to keep with me what I call a seller's mindset. So, and I think this can be beneficial that, whether you're contemplating a sale now or your sale process, at Ecos, it'll be, like you said, somewhere down the road. We don't really focus on it today. But that doesn't mean we're not focused and don't think like a seller in terms of how we think about our business, in terms of how we organize our business, in terms of how we anticipate questions and track data and track KPIs, and all of that with a mind toward, look, we can build a business and document a business in a way that will be attractive and that we can get buyers excited about. And that's different from, I'm not a fan of making a lot of business decisions or strategic decisions for the business based on what we think any particular buyer will think. But I do think we can bring a mindset of being a seller into everything we do, and that will ultimately help us. in terms of COVID and how to modify that for the times we're in, I think we've talked about it already. Just be very sharp on your COVID story, have it documented, and don't forget, right, when these sale processes happen, very often we're talking about 3 to 5 years of historical financials. So the COVID story that you're going to build for yourself now, it could be 2025, and you're still walking buyers of your business through this story in terms of what happened and how the business was able to adjust through this time.
Ben, do you want to expand a little bit on risk mitigation and how owners should be thinking about that?
Yeah, happy to. I think, I think risk mitigation means different things in different industries, right, Matt? There is, of course, having a strong balance sheet helps with the ability to mitigate risk. But I think that, for a lot of business owners, assessing what their risks are, first and foremost, right? As I mentioned, when you have a manufacturing facility, right, there is very good, cheap probability, or there's a good chance that you may have a case of COVID in your facility, right? So for a lot of business owners that we've been working with that do have manufacturing facilities, for example, they've had to, starting in March, very quickly, and even before, potentially scramble and understand, okay, what does a case in this part of the facility mean for our operations, right? And buyers want to understand, back to something we were talking about earlier, they want to understand not just the financial impact, but how it was handled, right? Because you may have a case in the facility, or several cases in the facility, and then none, and then you may have them again, right? After change of control, right? After a transaction. So for a lot of business owners, I think this current environment has been not just assessing risk that they're have always been assessing: supply chain risk, right? Customer risk, what happens with your customer, but it's just all been amplified, right? In the sense that, okay, well, what happens if my suppliers or one of my suppliers is impacted? What happens if one of my customers, if you're serving let's say the retail sector or the restaurant sector, right? So it's having to put everything through that lens and being proactive about it. It's not, some have had to lean on external resources to do that in some of the business. And when we've been talking to business owners, if they're not capable of doing it themselves, there is no hiding from it, right? You have to do it. You have to take a deep look, not, up and down. And I think that's actually not a bad thing for a lot of businesses and business owners. That's already caused them to be better businesses, and it's going to cause them to be stronger businesses, and their ability to be more agile and nimble as businesses on the other end of this thing, whenever it comes.
Yeah, I know there is value certainly in what an owner invests in the business to help mitigate risk, and technology risk is another key one that everybody has to deal with and should be very proactive around. Let's shift, if we will, and I'm going to start with you, Rich. We'll go around the horn here, and let's just talk about some stories and best practices and tips. We got a lot of owners that are participating here who just want to hear it straight and directly. And what can you share from your vast experience about setting someone up to be successful in a transaction?
Sure. No, and Chris and Ben have touched on this as it relates to COVID and kind of preparation around that. But I think Chris alluded to, right, those are also just best business practices to have in place and kind of always be about. It's a lot of how we think about the companies that we partner with kind of post-closing, but it's also what we look for in the companies that we're pursuing, right? We want people to have a good actionable plan. I think most importantly, and this got tested through March, April, and May. I mentioned we closed an investment in July. We had initially hoped to close that. It had nothing to do with kind of internally what was happening at the company. There was an external factor in the state that this company operated in that was holding up the transaction, but it was testing a very new trust relationship between myself and the president of this company. And we were having to talk about things that I've never talked about through the diligence process. And for me, that's what I always come back to, right? When we're talking to sellers, it's just transparency, right? We want you to communicate clearly the goods and the bads. The reality is most good buyers, be them strategic buyers or financial buyers, right? They're going to dig and they're going to find stuff. And what you want is you want to have a good relationship built on trust where you know how to deal with it, right? And so that both parties come away from that conversation and feel like they were treated and dealt with fairly and that there were no losers, right? Everybody kind of ended up in the long run winning in that conversation. I think specifically as it relates to if you're thinking about selling your business in this environment, and this has been touched on a handful of times, but document, right? Clearly articulate what you've experienced, what you've done. We've looked at a couple of businesses that have dealt with what Ben mentioned, where they've had a couple cases go through the operations, and they've learned from that, and then they've deployed those learnings as they move forward. That's great from a buyer standpoint, right? You're dealing with the fluidity of owning a business and operating a business. And sure, we have to deal with this acute issue of a pandemic, but we can't lose sight of the fact that we're responsible for the employees in our organization. We need to provide them with a good job and do the work that we need to do to provide for our customers. And so those are the big takeaways for me, especially kind of in this environment. But the biggest one is just kind of be transparent. Have good, clean information, but be transparent about that information.
I'm really glad to hear you say that. That's one that I see, and it's tough sometimes as an advisor to talk with an owner and to have that kind of sink through. So I love hearing that. Aaron, let's go to you next. And you've got a vast experience on both buy-in, sell side, strategic and financial. Share something with us.
All right, so you hit the absolute number one, is get the bad news out. Every company has an Achilles heel. Discuss it, deal with it. You can talk about how you mitigate it, but everyone gets, smart and dumb people always get to the right answer. It's just a question of speed. And I see more failed deals because people aren't honest up front. And the same thing applies, I would agree with you on the adjustments. I recently saw one where they showed me their information CIM, and it included the gain from PPP as part of their EBITDA, okay, rather than adjusting out. Now, you can be clever and say, let's have one book and set of adjustments for strategic, one for financial, but don't be cute with the adjustments. And again, these come from scar tissue and not any wisdom, but I'll give you another one, which is have a fantastic due diligence room. That is a reflection on your business. We go in there and files are empty, indicate that there's nothing there yet. Be clear, make it simple, because the more senior people will just turn it off. They won't put the time in if you make it difficult. So I think that's an important one. The other one that came up when I started in the advisory business before principal, and I've lived by, one of the questions come up is, how do I make this decision knowing I'm probably going to sell the company? And I'd say what we used to advise people, what I live by, make the decision as if you're going to own the company forever. And it's almost always the right decision, because the process may not work out the way you want, but you're going to really feel good about where you are at the end of the process if you didn't let everything get held up. And the last one I'll give you, I think especially important with COVID, sell before you have to. We see a lot of people that wait another year, and either health or their age or things like COVID, and now everything gets pushed to the right by 3 years. So if you've got a good company, you're thinking about selling it, it's probably better to move sooner than later when you have the ability to.
Thank you, Aaron. Those are great. Let's go to Ben. It's going counterclockwise here on my screen. Ben, and then ask Chris to wrap it up. I know we're going to be running out of time here shortly.
Yeah, happy to do it. And I'll Rich and Aaron already took a couple of the big ones off the table. But what I would say is, in addition to those, from my perspective, if you're going to make a decision, let's say you're going to make a decision to bring your business to market, commit to that decision. And committing to that decision means you have to have the mindset that you're looking at whatever expenses you're going to incur along the way, whether it's in legal team, quality of earnings team, your financial advisor, investment banking advisor. Look at those as investments. If you don't see them as investments, you're going to have the mindset that, well, maybe I can stage it, right? and you can stage it, but usually that comes to the detriment of the momentum in a discussion or momentum in a process, and ultimately you're going to come out wishing that you hadn't done it. And that's from experience. We've had some clients, look, especially as there's more uncertainty, there is a natural desire potentially to say, let me take it in steps, because 2 weeks from now we could have another shutdown of the economy, or my state might be shut down. So why don't I take it in increments and see? If you're going to commit to a process, commit to it. And then the only other one I would add is, in the interest of time here, is we've seen more and more scrutiny because of how much has moved online. For example, sessions like this, and just all the business that's moved online and is handled through video. There is a greater scrutiny on IT and security infrastructure of just about any business, even if it's the most mainstream business of all businesses. It doesn't have to be in the IT space. It doesn't even have to be in the high-tech space. So get that side of your house in order. It's often neglected towards the end of diligence. It's not the type of diligence that's usually you hear about legal or HR. Get that done before you go to market.
Great, thank you.
Mm-hmm.
And Chris?
Yeah, I'll just build real quick on Aaron's comment of build it as if you're going to own it forever. I'd say on top of that, but be ready to sell it tomorrow. Be on top of your KPIs, be on top of your metrics, have that data room ready to go. Matt, you saw this firsthand with us, but at Map Anything, we got an offer from Salesforce to buy the company, and we were ready for it. We were ready, and to the point of data room, on the first day of due diligence, they put 200 people in the data room. We had a small team.
Yeah.
Our whole company wasn't that big, but we were ready and very efficiently worked through that because we had spent a lot of time working our way up to that day, not knowing when that day would come, but we were on top of our number.
Well, let me just thank everybody for the time today, for your insights and expertise. There was a lot of valuable points and lessons I feel like anybody can benefit from, regardless of their stage and industry. And we didn't talk a lot about financials, so there's a lot of interesting points there that I hope were valuable and that people take and really think about and can utilize. We're now going to move to the Q&A with the audience. Well, welcome everybody to the live Q&A. Hope everybody enjoyed the panel. Felt like it was a great discussion. Saw some of the questions that were coming through the chat. And I think some of that may have been addressed through the third part, the third segment, where we talked about some real world experience and best practices. But want to just start going through some of these questions and address them, and then we'll shift over to the live kind of networking session. So the first one that came, Rich, if you'll take it here, is asking about when a former owner, so I'm guessing they rolled some equity, but eventually they decide that they need to leave the company. What are your thoughts on this, and share your perspective, if you will.
Sure. And we've been through a couple of these transitions. Again, the way we look to invest, we're typically looking to identify people that are hoping to partner with those companies. But there are situations where somebody has a desire to ultimately kind of change their role and have the transaction be part of that. Takes a lot of communication on the front end. In those situations where maybe it's post-closing and it's a couple of years down the road and somebody has maybe had a change of heart, again, we kind of rely on the foundation of trust that we've got in the relationship and hopefully come up with a good transition plan. In terms of kind of what is the actual cause for that person to kind of make that change, I can't necessarily speak to that. I'm sure it can be a host of different reasons, but we kind of fall back on that relationship and just make sure we dig in and have a good, healthy transition to make sure that all the stakeholders of the business, kind of customers, vendors, and employees are taken care of kind of through that transition.
Yeah, and I know we spoke about in the panel discussion around, the impact of COVID, and I think it sounds like there's going to be an increased desire for buyers to have owners take some different earn-out structures and being involved, and so we might see a little bit more of this owner or seller involvement going forward. Question 2, we'll put this over to Ben, if you don't mind, Ben, and I know everybody wants how do you uncover some value and what can be done pre-planning? I know there's a host of things that we'd advise, but is asking for one easy thing. Give us one or two kind of thoughts and ideas here about adding value before you go to market.
Sure. And I'll try to give two. I might have to give three, Matt. Sorry about that. But and I'm going to focus on it really from my perspective. I guess probably saying let's for the moment focus on entrepreneurs or those family-owned businesses, and that's why even three is a very short list. It's probably a list of 10 things, right? That business owners who haven't gone through a sale or through a transaction before, things that they oftentimes don't consider or neglect to consider. So from our perspective, I think number one is do some personal planning. Now, look, if you have a middle market business, a nice sizable business that's allowed you to accumulate some wealth, then it might not be just the financial question may not be as relevant, right? But don't just focus on the financial aspect of what do I need to get from a transaction. Focus on what's your life going to be. What do you think your life is going to be like after? What do you want your life to be like after? And talk to people that you trust. Don't talk to somebody who you may know that sold the business you don't otherwise trust to provide you with a maybe some harsh truths about yourself, right, and what they know about you. Whether it's your family, whether it's your close friends, whether it's your priest, your rabbi, it doesn't matter. But talk to people that you trust to give you an honest perspective on yourself. Talk to them about what do you think, this is what I think I want to do after. Do you think, and see if their perspective lines up with whether you think that's going to be possible. And then number two, I would say is figure out who from your management team needs to be involved. Figure it out early and figure out at the very beginning when you plan to bring the management team into the discussion. And oftentimes there is a desire, just like we a few minutes ago, we're talking about this notion that in this environment, especially, there is a desire to stage and say potentially, well, I'll bring my management team into discussions once I see the indications of interest. Give that some real thought in terms of how your management team, because you know them better than anybody else, how they will react to being brought into the tent later or at some point along the way in the process, not at the very beginning. And then three, I think what I would say is related to that is figure out how you're going to compensate your management team. That's going to be helping you through the transaction so that you understand and they understand what it is that if they're going to be asked to do a lot of incremental work in addition to their day job, there's probably a feeling that they should be fairly rewarded for that, right? If they don't already have some kind of a plan. So think through those tough things and don't neglect to consider those items until you're into the process.
Yeah, and I know. Thanks for that, Ben. And you could have gone over three if you had wanted. We wouldn't have stopped you. But appreciate that perspective. And I would probably add that it also depends on the size and sophistication of the company as well, right? Different businesses have run themselves differently, the way that it worked for the owners, and so sometimes there's an opportunity to get some professional involvement, whether it's sell side QAV or whatnot, just to have a different perspective, have another group come in and kick the tires and help flag some things that might benefit the business from a valuation, or might be some issues that get flagged on the front end that help keep the deal from falling apart when they get flagged eventually towards the end. To one of Aaron's points on the panel, Chris, as a CFO, KPIs and how are you forecasting? Question 3, I think you can see it here. What are your thoughts here?
So the first point I'd make, our KPIs haven't changed in terms of what those KPIs are, and I'll talk about our business, and I think it extends to a lot of businesses. But for us, it's revenue growth, it's customer retention, it's unit economics around customer acquisition costs. Those are the things that drive our business. Those haven't changed. The mix of those, and as we talked about in the panel, what investors are looking for and kind of how they're judging growth versus other things has changed. But how do we look at those metrics relative to moving back to a pre-pandemic time? The short answer is we don't. We don't have the luxury in our business of in the near term thinking about pre-pandemic. We serve a base of customers who sell beer in their tap rooms. A lot of those tap rooms are still closed, still operating at 50%. So for us, it's not about waiting for things to happen to go back. It's how do we change the business, and what are we doing to the business to allow us to hit those KPIs in a world of new normal. So how do we help our customers sell out of the parking lot versus selling out of the tap room, as an example. So focus on your KPIs, but think about how you change your business in order to hit your KPIs in a world of new normal.
Very good. Thanks, Chris. So we're going to shift gears here to the post session, and I think everybody's going to be going there. But want to appreciate the questions. And I know Michael T, and I saw yours was the fourth one on COVID. That was probably one of the more difficult ones to address. So maybe we can catch that in the post session or offline. So we'll if everybody would please head to the post session, we will join you there shortly. Thank you.